Okay, welcome to my YouTube videos. I'm going to explain to you tonight where the market is, what's going on. But first of all, yesterday we had in the market, we had this rally. You can see it right here on this candlestick here. And you can see it on this candlestick here yesterday. And I said to everybody, we'll fade into it because the market is going lower. Okay, and it is going to go lower. The stock market, it's 2% away from an all-time new high. Okay, now remember, we've already had, and remember I said back here to short the market. This was back in July, okay? July, August, right here. I said, let's start shorting it. I saw all kinds of money coming out. I had a beautiful pattern, and then we caught this beautiful short all the way down. It was about a 12 to 14% profit. Then, again, in January, we had the manipulation of the yuan, and it gave us an opportunity to excuse to short this. So we caught this one. So we caught two. This one is setting up beautifully, just like this one. You see these? We have what we call a lower high pattern right here. Lower highs right here. See it? And you got the same lower high pattern here, setting up just the same. Now, we have, think about this for a moment, a 0.5% growth in our GDP. Our corporate earnings are down 7 quarters in a row. Our durable goods, our capital goods, all a disaster. Disaster. Consumer spending growth slowed. Business investment, so important, plunged. Exports declined. This is really serious stuff. Serious stuff. Our manufacturing orders declined. The lowest since 2009. Sears closed 10 stores under the brand Kmart. For the last 8 years now, new home sales have been stuck at 500,000 a year. Our earnings, as they say, for the S&P, negative. Existing home sales, housing starts, same-store sales, all plunged. That's after business sales plunged 22%, truck orders plunged 37%, rail orders plunged 21%. There is no good news anywhere. But yet, the market continued to rally. Why does the market continue to rally? How do they do that? What they do is the banks, the Federal Reserve, our private bank, what it does, it will take and borrow, it'll tell the Federal Reserve, okay, our private bank, the Federal Reserve, will print money, they'll print money and they give the money to the banks for them to buy the stocks to push the market up. Even though the market should be down. As earnings and profits are going down, okay, earnings and profits were going down like this, the stock is going up like this. That's a very dangerous divergence. That means they engineered it up, okay, which means this is now the third bubble we're in. We had the dot-com bubble, we had the housing bubble, and now this is the third bubble. Now, it's important to understand the bubble because if you look at the third bubble, which is we created right here, remember what happened. This was the tech bubble. And the tech bubble, it gave up and dropped because like all bubbles, when they push it up, at some point, it's all debt. It's all debt that pushed it up. And then when they can't pay back the debt, then we get deflation. The prices start dropping because sales demand stops. And when the price starts to decelerate, and then people get laid off. And that's when you get the stock market correction right here. This was the first bubble. This was the tech bubble. All right. 1995 to 2001. This bubble right here was the housing bubble. Same thing. It was all debt. Sell a house to anybody, all debt. Same thing. All of a sudden, there's so much debt, people can't pay it back, and then sales stop, just like they did over here with technology. Sales stopped here. And when sales stopped, then you get depreciation and prices drop. That means profits drop, people get laid off, and then you get the final collapse like you did here. Now, this one is the granddaddy of them all. This was tech. At least we got tech out of it. This was housing. We got housing out of it. This is all pure debt, tremendous debt. All the companies are buying their own shares. It's just borrowing money left and right. We owe so much money. It's incredible. And the same thing is happening now that happened here. Just remember that. We have, like here, remember our sales stopped, slowed up, and then, of course, that's when you get deflation, people get laid off, and the market crashes. Sales of housing stopped when gasoline started to go up. People stopped, prices went down, deflation, and then, of course, people got laid off. That's what's happening right here, right now. And what we know right now is we start seeing the numbers that are coming in. Oh, my God. All the corporations that are reporting, they're getting worse and worse and worse. And we can see it. And we're seeing more money come out of the stock market by hedge funds than we've ever seen. So this is getting ready to collapse. And the debt is tremendous. That's why we can't rally. That's why you're seeing that we got business sales plunging, truck orders plunging, everything's plunging because we can't grow economy when we don't have savings. When we got so much debt, we have 20 trillion in debt, national debt. We have another 212 trillion on top of that of debt for for all our entitlements. So there is going to be one hell of a crash. But here's what I'm looking for first. I think we're going to come down right to here. I think we'll come right to this point right here first, right here. That's about a 20% correction, okay? So can we make a new high? Well, let's take a look. Here you are. This is the new high up here, only about 2% from a new high. Can it do it? Well, they tried, but they just can't do it. Why? Because there's no buyers around. The smart money is pulling their money out. That's why we have a higher probability of this market dropping than going up, because the new money, there's no new money coming in, and institutions are pulling their money out left and right, even more so when this market dropped. Remember how this dropped? Even more so over here. They're pulling more money out here than they did over here. So it's just a matter of time, all right? So join my gang, and I hope you enjoyed this little update on what the market is doing. And when this turns red, this guy right here, the PT2, 2 days in a row, you sell it short. It's never, ever wrong. Okay, never wrong. So join my gang. See you on the charts.